In terms of what attracted investors to Hipgnosis Songs Fund, we can really trace it back to the very low interest rates that came into place in the wake of the GFC back in 2008. So very low interest rates led to demand for alternative income sources, and that in turn led to lots of listed investment funds coming to market in asset classes as diverse as shipping, infrastructure, renewables, and ultimately music royalties. And we saw Hipgnosis Songs Fund come to market in 2018. Music royalties were particularly in demand given their very low correlation to equities and credit, and with streaming really having transformed the economics of the industry, meaning that one-off lumpy payments were now much more predictable, recurring revenue streams. And we really saw Song as a pure play way to get exposure to that market. We thought it likely that Song would be taken out by a larger company once it achieved scale. We were aware the manager had the right of first refusal to acquire the portfolio, but given the lack of private funds the manager had, that wasn't really a problem for us until, that is, Blackstone bought a majority stake in the manager, and given their deep pockets, the option became a more meaningful impediment to shareholder value being realised than it was previously for us. We're also concerned about inconsistencies in reported figures, vague answers to the questions we put to management, and a general lack of transparency. In response to those concerns, we sold the vast majority of our stake back in late 2021, early 2022, before the share price started falling precipitously from there. We then re-entered the investment at a much lower share price in much more material size back in late 2023, ahead of a vote on the company's future. Our strategy there really was to engage with the board, engage with other shareholders, and try and secure changes to the board that would ensure new directors came in who would, for the first time, properly represent shareholders' best interests. Shareholder activism, as I just described there, was absolutely instrumental in securing a good outcome for shareholders. In the short term, we saw incumbent directors voted off the board. We had 2 new replacements come onto the board who are much better suited to fight for shareholders' interests. And in the longer term, we saw a bidding war erupt for the company's assets under the stewardship of the new directors that led to a very good price being achieved for shareholders, particularly those that bought in late in 2023, as we did for the bulk of our investment.